Hey guys, so in this video we are going to look at CAD JPY and how we could have jumped in on this long trade after noticing this break of structure. The idea is pretty similar to the previous video on GBP JPY, whereby we discussed and said and explained why after this first break of structure price did not immediately continue, but why did it continue after breaking this entire structure? Okay, so what we are looking at here is a very simple concept, more of a continuation of the previous concept, whereby we have seen that price has broken the structure, or it has broken the previous sort of a structure retest, because if you isolate this trend from these highs, okay, we have something like that. And when we have this kind of price action, we said that this becomes like a new structure retest, although it might be within a trend. Why? Because we did break structure and we made a newer high. Okay, so after this break of structure, when price finally started pulling back and broke the previous highs and lows, the procedure is pretty much the same. So assuming we are at this point, so we said, what do? You just draw a line. This line is not important. Personally, I don't use it, but it's important for you to train your eyes, okay? Then after drawing a line, you go back to the 1 hour and find that hidden invalidation point. So we said the hidden invalidation point is when you have a downtrend, okay, then we break to make new highs, and when we finally continue, so this becomes the hidden invalidation point, this last lower low. Same as if it were a normal trend, then that would have become the invalidation point. Okay, so when we look at which trend on the 1 hour have we broken, so this is the 1 hour trend that we have broken above. Okay. After that, up to these highs, we don't have any other trend. We haven't broken any other highs. All right, so that makes this to become the validation point on the 1 hour. Makes that the 1 hour hidden validation point. Okay, why? Because it was the last lower low. It was the last lower low before eventually going on to break structure. All right, so we said, what do? We find the 1 hour, then we go a bit lower to the 15 minute. Now here the 15 minutes is where I would want you to watch more closely, because if we zoom in closer, we'll find that the 15 minutes invalidation is right below the 1 hour. Okay, if I can just okay, let me just delete this for a second, and let's take a look at this price action. Okay, so we have a series of highs and lows, okay, then we broke below, then we continue with the bullish trend. So that means that this becomes the invalidation point, right? So in this case, if I switch to to a line chart, you can see that this was the last lower high here. Hello, sorry. So that becomes the 15 minutes. That becomes the 15 minutes invalidation point. Okay. So now if we go back to the 1 hour, if we go back to the 1 hour time frame, okay, and we have agreed that this is our 1 hour invalidation. Why? Because it was the last lower low. Okay. So now you see the difference between the 1 hour and 15 minutes invalidation point is just not even a pip, just 4 micropips. Okay, so not even a pip. So yeah, so that means that now we would expect price to pull back all the way to that level before getting continuation. So let's just play that and see. Okay, so price eventually made its way and pulled back. It wicked below by about 12, 13 pips, okay, and then proceeded to continue with the bull trend about 248 pips. Okay, so let's do a quick risk to reward there. If you had 20 pips, if you had 20 pips of stop loss, 20. So that makes that an 11 to 1 risk to reward ratio, I think, which is a beautiful trade. So price just comes in to test that and then continues. And this took about from 14th May to today, which is 26, so 14, 24, about 12 days. 12 days of just sitting back and waiting for a beautiful risk to reward. I think it's a very fair trading by all means. So that takes us to the end of this video, and we'll catch up in the next video.